The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman on this 26th day of September. My pleasure to be here. The Dow is up 7 at 22,304. S&P is up 2 3/4 at 2498. The comp index is up 11 at 6381. The VIX is actually at 10.37, up 16. And this is going to be very interesting for a couple of reasons. See this E-mini? I've still got it at a peak C. I might have to change that. If we break below 2483-ish, somewhere around there, in the next 2 days, I'm just going to have to say, well, that was a peak C1, maybe a C2, but it did not make that D unless I use a phantom peak. I don't want to do that right now, no need to. There are a couple of things going on. The weekly chart has this doji candle from last week, and as such, see the little plus sign here? A close above 2507.25 this Friday would be very positive, and a close below the low of 2492 would suggest that the 2472 9-period exponential moving average in the weekly chart is liable to become a target. The other thing also in this particular chart, the MACD has not crossed positive in the weekly chart. It could deflect lower. The stochastic strong at 88%. So it's just levels that I'm looking at that are going to change the game. So let me just do this. The 120-minute chart stopped at the downtrend resistance line at 20 in the 2501 area, trading at 2496 right now. And I would have preferred to have had weakness and then strength rather than strength weakness. Now we have to see there's going to be some attempt to keep going. Now, I just need to repeat my mantra. In a bear phase, daily, weekly, monthly, 1 minute, doesn't matter. Prices fall dramatically, consistently, as the VIX index rallies sharply and holds its gain at the end of the day or at the end of the bar. And there should be bad news that accompanies this so that the sense of selling pressure is rife throughout the day. The S&P, invariably the futures and the Dow futures open sharply higher. Dow maybe minus 80, the S&P futures minus 12 or more, and then they try to rally, fail in the middle of the day, make a kind of an arch formation intraday, and then come back and close near the low of the day or at the low of the day. So far, we've just not seen that. Even yesterday was a very sharp day with the Nasdaq. Let's get to that in a second, pulling back very sharply. And yet, mostly there was pretty good action. Now, let me do this. The Dow, INDU, is up 4. It was up 60-something earlier on, hit a high of 22,369. All-time high is 22,419. That was only 60 points away, 50 points away. And now it is kind of struggling, but the MACD is still quite good, and the stochastic's at 88%, turning down, but still quite good. So that is giving you internal strength. And so far, the day is young. Anything can happen by 3, maybe 20 minutes to 3, somewhere in that area. We might see the Dow down 47 points, the S&P down 6.30, and the Nasdaq regains its downside momentum. I'm looking at this and saying it should have done that already. There is a rotation going on, and I'll explain why as we move along. So this is very simple for me. If the Dow starts to trade below, this is the 9-period moving average of 22,281. If it starts to trade underneath 22,280, be a little careful towards the end of the day. If it holds here or actually rallies somewhat and we're able to get to 22,328-ish towards 3 o'clock, I think that would be a good sign. Now, if you look at the S&P, so wait, let me just do this one more time. I want to go back to the Dow. The Dow is at a peak C, unless I use alternate counts, and the Dow Diamonds is already at a peak D. So there's a discrepancy. The SPY, because of the dividend allotment on Friday, is at peak C, maybe peak C1, C2, but it has not made that D. However, if you look at the S&P, SPX.X, trading at 2498.86, up 2.17, holding the 9-period moving average. It did make the D, but look at the MACD, just like the Dow. The MACD is turning down, but still positive. Stochastic's turning down, but still positive at 86%. Dow's at 88%. That's even better. But you've got, again, the deflection potential in the weekly chart come this Friday. So what am I looking at? Anytime the E-mini, anytime the S&P cash can go above 2503 today, get into the 2504s, if it's today, that'll be excellent action. If it starts to slide later on, it's down at the 2493 area, down about 5 points from here, I'd have to say, be careful. Okay, now let's look at the QQQs. They got hit, they got smacked, in fact, yesterday. I'd said that there's an arch formation. It's usually quite a negative formation, that it was going to test the low of the left side, 5th of September, 143.60 level. Took it out yesterday, gap down, and today tried to rally, but it's still down on the day. Oops, and no, it's off the highs. It's up 0.34 at 143.14. So that is saying not good. Not good. Why? Because the SMH, the semiconductor index, up 14 cents at 89.65. Has just been repelled by this 9-period exponential moving average. I'm pretty sure I'm going to have to call this a peak E if tomorrow is another weekday. And there's that doji candle in the weekly chart, and we are underneath it. So be careful. The SMHs are suggesting that there is some volatility here towards the downside. Got to be very careful. Now let's go to the IWM. Made a new all-time high yesterday. Under that all-time high of 144.94. Let me type that in, 144.94. 144.94 of yesterday, trading at 144.77, but a nice green candle. Let's see if that can last you the day. There's a sense that the IWM is playing catch up, and in fact has done more than that. It's made a V-shaped formation, closing nicely above so far. It is above 144.35, the high of the 23rd of July, and that's a good sign. But the day is young, and it's gone to leg E in the weekly and the monthly and the 120-minute E in the monthly, and the 120-minute chart is still acting very well. Hey, let's go to gold. Gold trading down 7 at 1303. Had a fabulous move yesterday. Added to a little bit this morning. It went from, in 3 days, it's gone from the 1291 area to a high today of 1317, trading now at 1303, giving most of it back, a big chunk of it back. I just think that gold is not the play right now. Yes, bounces, but not really acting as well as it should. Silver is acting much weaker. It's down 0.21 at 16.93. I almost given back the gains of yesterday. I'll be back. We'll talk about crude oil. We'll talk about commodities. We'll talk about bonds and crypto. I'll be right back.
If you're looking to open your portfolio to a world of opportunity, consider the new market-safe emerging currency CD from Everbank. This 3-year U.S. dollar-denominated CD gives you exposure to 5 equally weighted currencies from Brazil, China, India, Indonesia, and Turkey at a time when experts see great potential for global growth. Even better, it features a 7.0 leverage factor, which means you could earn a potential market upside payment of 7 times the CD's performance at maturity with no cap if the currencies increase in value over the CD's term. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. The September 28th funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. This advertisement is sponsored content. Everbank is a division of TIAA, FSB, member, FDIC.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks, we're back. So a whole bunch of questions came in during the break. I'll try to get to them. Let's just do this now. I want you to look. So silver is looking weak. The dollar. So the dollar, the dollar's at 93.17. We're long the dollar. Been long since, excuse me, since the 8th of September at the low, just off the low actually, and using the ETN for the dollar, and it's in a leg C. It was very important that it made a strong leg C because it just made a nominal one yesterday, and this is a good sign because it's the first time that the weekly chart has actually pushed above the 9-period exponential moving average forever. Since 14th of April on the weekly chart. So this is an A. I call it a gray A because it's just starting off the move, and it just all of these indications, Chapman wave notations, are clues to where we are within the waveform. Monthly chart still looks terrible. Weekly chart has improved a lot, and the daily chart is in strong leg C. But until it closes above the left side high of the 31st of August at 93.35, so we need to go above that, close above it. Still, just as a formality, you have to call this retracement failure mode. I'm actually going to put in an up arrow because of the way the MACD and stochastic are acting right now, and that suggests we should go to a D, which would be a buy mode, which is why I'm keeping the blue notation. Okay, now EUR, USD, the euro-dollar currency pair, has the exact opposite. It's in leg B to the downside, very sharp move, and that makes this a peak E at the top right there. I said that there's a good chance it'll become a peak E, and I was putting a down arrow because of the action. And the weekly chart, I'm going to wait until Friday. It should give a sell signal, but I'm not going to do anything until Friday. And the monthly chart has that single leg A, a fantastic leg A, that for the first time is bumping into resistance. USD JPY, you remember we used this as a kind of a bellwether to say that it's had such a spectacular move and that the yen, the dollar-yen currency pair, and the dollar tend to go in the same direction a lot of the time. And we're looking at peak A, single leg A up this particular moment, but it's holding the 9-period moving average at 111.55. It's trading at 112.14. I think it's going to go to a leg B for the next couple of days above 112.71. We'll see what happens. And that'll help the weekly chart a lot. Okay, so we've got that out the way. Crude oil. So we've been looking at crude oil. A couple of questions came in about oil service, crude oil itself. Short USO when peak F, big resistance coming up. So this is a D in the daily, and it's a C in the weekly. And I'm going to go with the C in the weekly to say that this is a lot of strength we're looking at above the 9-period moving average of 49.72. The monthly is going to take a little while to really improve, but it's a peak E short-term top in the 120-minute chart, pulling back a little bit here. But I tell you what really is interesting is if you look at the DBC, which is what we own, from the 1482 area to the 1554 area, this leg F/C is going to be very interesting because the MACD is good, just flattening out a little bit. Stochastic is good, not as good as it was earlier, but it's the weekly chart that is really very strong in the leg D. So what I'm saying is that there's a percentage weighting in this particular DB commodity index tracking fund suggests that any rallies in crude and heating oil will do very well on the percentage because they are the biggest percentage components they lead the percentage. It's not like they have 35% and everything else. No, they just have like 11% or 9%, and others have slightly smaller percentages. So that's really helping. So DBC has 1554 down 14 cents, hit a high yesterday of 1568, a new recent high. And because of that, I'm looking at the support at 1542 to 1534 as being really important just on the shorter term basis. Now let's go. We forgot the TL. I didn't forget. We just waited for the TLT, trading down 34 cents at 1.665. Now this is going to be very interesting. Why? At a single leg A up, I still think that yields on the shorter term still could push a little bit higher. Let's look at the TNX, TNX.X. Trading right now, peak B, holding the 9-period moving average. Yeah, we've seen quite a few charts with this kind of, it's had two gaps from the low that was made to the upside. So this is suggesting to me that, and if you look at the XLF, I'm trying to put a bunch of things together. So the TLT at 22.34 up 14 cents has 22 pretty important support, and 22.55 as what needs to break out in the short term to really push higher. And if you're looking at the XLF, which is the financials, which have really benefited, although I'm thinking that financials are getting to the point now where they're going to have their own momentum, and trading at 25.39, just down a penny, the XLF is having a high-level consolidation and should make leg C above 25.52 very soon. It's the speed and the number of cents that it breaks above that left side high of peak B, because 25.59 is our target, but that's not good enough. I want to see this getting into the 25.67 or higher area quite soon, and that's going to tell me that the financials are now in a world of their own. They are almost independent of, yes, yields are a part of it, but they're already acting very well as if fund managers are gravitating more towards these financials than they did earlier in the year. Apple, a question about Apple. Apple trading right now at 152.53, up $1.97. Yeah, nice little V-shaped turnaround, but the stochastic at 11 needs to get into the 15s or higher. The MACD's got a lot of work to do to start to get even close to turning up, let alone flattening out. And the on-balance volume did make a V-shaped turnaround. I would say to you that the real test for Apple is how does it, if it can, how does it handle the 154s? If it's able to break above it in the next week, that's very good action. If it breaks under 149, closes under 149, be careful below. Apple could have a pretty severe continuation pattern to the downside. Crude, high-grade copper. High-grade copper trading down again, try to rally, failed to the 9-period moving average at 2.916. So this is telling me that that commodity sector of the golds, the silvers, copper, I think there's somewhat of a problem there. and that problem should last a little longer. Platinum's making a new low as we speak. Yeah, I think there's lower lows to go in that particular sector. However, within the context, you saw yesterday that gold and the dollar rallied together. One has to give. The way I'm looking at the dollar at this particular point is that the dollar is so oversold that even just a decent oversold rally to a short-term overbought level could take us from 93.18 here to the 9-period moving average in the monthly chart of 95.61. That would be a spectacular move on a short-term basis that isn't really being expected. And if you look at Johnson & Johnson, very much impacted by the dollar, international healthcare drug manufacturer, trading at 131.29, way off the 135 high that it made just a couple of weeks ago. So that's telling us a little bit about what's going on. This is Basil Chapman. This is the Tiger Technicians Hour. We've got a bunch of questions, more questions I'm going to get to, and a question about the Groucho Marx and IWM, and a question about CF, MOS, or potash. I'll be back, and we'll go through those as soon as I return. Dow's up 6, S&P's up 1.5.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profile So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
So I was reminded by Z in the Den that the NDX has gone to a leg D in the monthly chart, and it has. The QQQ series, which is the trading vehicle for the NDX 100, has only made a C. Remember, we discussed that last week. I said that there's parallel highs, just slightly higher highs, and to be absolutely technically correct, This is still a C. So that's what we're looking at, and that turnaround in the daily really has only impacted the weekly slightly, being just under the 9-period moving average. I'll be able to do a lot more tomorrow. In the meantime, I just want to cover this as best I can. Couple of things I wanted to look at. So that IWM, we spoke about the last week, and again this week, there's this Chapman wave Groucho marks, eyebrows pattern in the V-shaped in the weekly chart. What that means is that if it stops right here, the IWM cannot go much higher. It goes in, if it goes to the 150, 145. 90 to 146.30 area, that's not a Groucho Marx eyebrows, and it could be one of those where you raise one eyebrow and you don't the other. But no, this pattern is a V-shaped pattern. It has to go almost equal, like a double top, and then it comes back down, and the chances are it's going to come back down quite sharply. Sometimes it tests the 9-period moving average or some moving average of importance, but I want to just deal with this. It's a weekly chart. Let's wait until Friday. Remind me again. Another question I had was, Apple. Look, Apple is in a sell mode in the daily, a sell signal in the weekly. I have to wait for the monthly chart to see if it's upgraded to a sell mode, and still a leg C, and that corresponds to the Qs in the monthly chart, and I'm still going to keep it as a leg C. So I'm looking at this and I'm saying Apple is getting very close to some kind of support in the 150 to 140, 850 area. If it breaks under 148, closes under 148, that's a real problem, certainly in the short to intermediate term. But so far, it's just had a decent pullback, trough A, B, trough C, and could try to bounce. 154 to 156 is going to be very strong resistance, and that's the way I'm looking at it. No position, just looking at it, having spoken for a little while about Apple being a stock that fund managers have gravitated to successfully for a long time, and that it is now like the General Motors of the 1920s. It is there. It is kind of consistent. It has its ups and its downs in terms of its product cycle, but the products are always bought. This is the one time that it might be having a little bit of a problem. You can see that in the chart. So just treating it as a very long-term buy and hold if you're holding it, but shorter term, just be a little bit careful because it could still pull back more. Now, one of the things I wanted to talk about, that was the Qs and the Apple. RUT we've done, IWM we've done. XOP-OIH. Let's go to the OIH, which is the oil service. This is the Van Eck Market Vectors Oil Service ETF. It's gone to an E. Wow. Let me just see this. That's a big move. 93, 93. Okay, so it's in a there you are. E goes to an F/B. The reason why I'm making an alternate count is the MACD is still climbing and the stochastics outstanding at 90.77. On balance is very strong. So let's just treat it as nothing to do here, folks, right now. Let's see how the 25.81 up 1 cent. Let's see how the 25 support holds, 25 to 24.66 over the next 3 to 5 sessions. Single leg A to the upside, it deserves some kind of a pullback. And that's really what it might be doing, having a bit of a breather. That's all I'm calling it right now. Key support 24.50 on the short-term basis is trading at 25.81. If we can get to 26.30 in the next 26.20 in the next day or two, that 26.73 200-period exponential moving average that it hasn't hit since it broke down back on the 12th of April at 31.28, 30.68. That's the bar that it broke down. It hasn't even been close, and this is the closest it's got to. As it gets closer, it tends to want to touch that line. So that's that. That's oil service. XOP, OIH, and XLE. XLE, please. What's the question? Please chart. Okay. So the XLE right now, I'm going to just do this. Oh, I thought I'd done it over the weekend. I looked at it, and then I kind of skipped over it, I guess. Oh, that's right. I did this, and I wasn't sure about that. I looked at one that looked exactly like this. So that's 63, 62. Here we go. This is from the lowest, most identifiable trough. Count each successively higher peak, A, B, C, D. I'm not sure if that's a peak because it's been covered. 0203. Okay, it's not, and there it goes. It's at an E. Very close to the 200 period simple moving average or smooth moving average. What I'm looking at right here is that it deserves a little bit of a breather. 66.90s to 66.40s would be very strong support for the XLE, the S&P Select Spider Energy Fund. And right now, this is such a good move that I suspect it won't pull unless it breaks 66 by some miracle. It just collapses in the next few days and breaks under 66. I think it's a sideways consolidation while it's just had a great move. It just needs a breather. It needs to re-energize. Good. We've got a whole bunch of questions out of the way. Next one is, there's a rude awakening coming to the markets. It's in Apple, Facebook, Amazon right now. You know, I can't disagree that we've got a surprise coming, but now I can give me a chance. I've covered everything I wanted to cover, so let me just do what I wanted to do to look at the markets. In the Chapman Wave methodology of the Chapman Wave 5, this was a very critical moment. Why? Because my impression was that this was like an X to the downside where we start to move to the upside, but yesterday's turned down a little deeper than I anticipated, which is why we took a smaller profit than we had initially in the Dow Diamonds and actually nibbled back in this morning. Why? Because I still see some residual strength. I'm not sure how it'll play out just yet. I might have to change my mind by day's end. But in the meantime, 120-minute chart, if I'm absolutely looking at it in a classical Chapman Wave 5, says we just made a 4 and we should be in 5. We will go to a 5 if the Dow at any point in the day takes out 22,289. That'll start a potential 5 to the downside, and that should take us to 22,218, one point below the 22,219 low. That's the way I would look at it if it's a short term, and I'm being very strict about this. And the MACD, you can see in the 120-minute chart, is still weakening. It's actually, histogram's improving a little bit, but it's still quite wide. And the stochastic struggling at 37%. It's not really at the 60% level. So that says to me that I've got to be prepared for an H pattern in this particular right side chart of the 120-minute chart and a Chapman Wave 5 potential. I would love to be wrong, and I'll be wrong if by 2:40 to 2:52 this afternoon, Eastern Time, if there is a push above 22,332, that would be 32. Oh, it's about 34 points from here to the upside. Then I think we will actually start to move higher. And we will take the top, we'll try to tackle the top today, which was 22,369. We'll be back straight after this break. Basil Chapman, Tiger Technicians Hour. I forgot to show the 10-minute chart. It's in leg C to the upside. Working very hard to do that. I'll be back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Hi, everyone. If you're looking at this 10-minute chart, made that PD right there, just about 10 something, 10 o'clock. Pull back sharply from the 25, what was the high? 2501.25, goes down to the 2492 area, and now it's bounced and pulled back. This is going to be very important. So it might be well and good to say the Dow's holding well, this S&P is holding well, the comp index and the SMHs, semiconductors, are pulling back sharply. What's the big deal? No, it is a big deal. These are heavy stocks, Amazon, etc., Apple. These are very important stocks. You can't just have the, in this particular case, the NASDAQ leaders breaking down and have a rotation that says all's well. It does affect the market, and there are a number of these stocks also in the Dow. So the way I'm looking at it is that this is very good action, because we didn't get that major sell-off into the close yesterday, major sell-off at the open today, tried to rally, and right now we'd be, well, minus 35, minus 45 in the Dow, minus 6 in the S&P, and then go down to the lows of the day. Day's young, we could still do that, but this is not the way that big sell-offs occur. But at the same time, if you're going to just nickel and dime lower highs and lower lows, that's also kind of bearish, not a bear phase, but it's bearish action. So I want to see where we close today. My suspicion is there's just enough buyers to have the Dow close. I'd say if the Dow is up a certain number of points at between 10:10 and noon today, well, we've passed noon, that would be a positive, and then we should see a drift to the upside. Now, of course, we're stuck in the middle of the range, but this is still pretty darn good action, considering that you had every excuse to. Nobody would have said anything. They would have been upset, but nobody would have said anything if the Dow was now down 67, the S&P down 8.45, and the Qs down even more. The Nasdaq down something like, say, 27. Because they'd say, it's been a great run. You've got to expect some kind of a pullback. So just to be holding and now having a plus 12 right now, S&P plus 178, that to me is good action. But it's not. It doesn't make it extremely bullish, but it says that there is buying support. Bullish would be, let me go back to this chart. Now, that was a 120-minute chart. Bullish would be on the daily chart right here. If there is a close towards this dashed line right here, and if we could get up into the 22,003, oh man, that's impossible, 2384 today, that would be amazing action. I say that you could get a plus 30, plus 27, plus 30. To go much higher than that would really take a whole new bout of buying. But if you're looking at the this chart here, the MACD is turned down, but is still holding very well. Stochastic's turned down, trying to turn up with the fast-moving average and the on-balance volume, and it's still at 89%. That so far is good action. So that's what I'm trying to articulate, that it is sector rotation. If you're looking at, I have a question about the IBB, which is the NASDAQ Biotech ETF, down 3.43, down to 327.97. Look at this chart. It's right at the bottom end of this rectangle formation. It's just actually under it. 329 is really the support. Yesterday, 2 days ago, it hit 327.73. Right now, it's at 327.92. This is tough. This is suggesting that the biotechs are actually struggling for 5 weeks. 1, 2, 3, for 4 weeks, and have not broken to a new recovery high above the 336.25 level, and therefore it's trying to test the downside support. So keep an eye on this, because as you go through the sectors, you want to see what is working. Well, what is interesting is, I'd say this to subscribers this morning, GM, which we are long, 2 positions, is holding very nicely. It did have a round number 40 low yesterday, hit 40.64, trading right now at 40.44. Nice inside day. So far, that's actually better action than I expected. Ford, also a peak D, but it could be a leg D, could be a peak D today if there's no new high above yesterday's high of 12.06. If you look at FCAU, that's Fiat Chrysler. I've got this as a peak G/C. That's the way I'm going to put it in for now. But it is holding the 9-period moving average, getting a little choppy. The weekly chart is spectacular, as is the monthly. But we'll see how it holds support. It's at 1741. It really needs to hold 16.82 to 16.63 over the next few days. If you're looking at Toyota Motors, leg D, so many Ds, this is going to be very important, how it holds. Single leg up, I mean, a sharp move to the upside, almost like a single leg. Hardly had a breather for the peaks, and it's in leg C in the weekly chart. And the weekly chart says it's the left side, right side price time match, taking you to 123.18. That was the high of the 16th of December, the week of 16th December 2016, and it's trading at 121.22, just underneath that in the left side, right side price time match, which goes to October the week of the 13th to be able to get there. And if you look at Honda Motors, HMC, you'll see that it's in a leg E. So this says to me they're getting a little bit toppy on the short term, and these have been leaders over the last week. If you look at the SLX, this is the silver ETF. It's pulled back quite sharply, holding the 9-period moving average of the weekly at 4170, but it's really struggling. So this is what I was talking about. How the market handles a rotational correction is going to be more important. But if you're looking at sector identity, you will see that the SMHs led the way up, led the way down, led the way back up, and now is sort of leading the way down. So you're going to have to watch that very closely. The IYR, I had a question about the IYR. What was the question? Bob wants to know, IWM versus VIX, who will win? Oh, that wasn't the question. GT wants to know, IYR, dollars into REITs, Chapman Wave. Okay, so let's look at this. You've got a peak E in the daily chart of the IYR, which is the S&P. This is the iShares, sorry. This is the iShares Dow Jones RE Index Trust. Had a sharp pullback from the peak E high in the daily. The weekly has got an F/B. I have to do this alternate count. I don't like to, but F/B. Why? Because it's dropped a little bit too much to call it a C with conviction. This could very well turn into an F. And it went to a D in the monthly chart. So you finally got your D in the IYR. But the REITs themselves, some of them are acting very well, holding nicely. So we're going to be watching this very closely. And within the context of a statement in the debt, note to Mr. Yellen, there is inflation. It's in the stock and bond markets and real estate. Hello? Yeah, there's no question about it. There is some form of inflation. No question about that. Now, the VIX, when I look at the VIX, yes, sure, I look at the VIX. VIX, trying to balance here, up 17 cents at 10.38. There is something going on. instead of having sudden rug pulls making lower lows and lower highs in the market, somehow we're getting the opposite. We're getting sudden jabs of buying that push the market up and then it pulls back, push the market up and then it pulls back. I want to talk about that in a moment as soon as we get back for the final segment, to say that that is more bullish than bearish, even if it's as sector directional. I'll be right back. Basil Chapman, Target Conditions Hour. Be right back. Let's look at the 10-minute chart. Yeah, wait for leg D. We'll see what happens. Up.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
Again, Steve Rhodes comes right up, and Dave White and Tom O'Brien. What is today? Today's Tuesday. Oh, and then Andy here. Full programming day should be great. Dow's up 18, S&P's 2.5, up 2.5. So this is what I'm looking at. So I had a question about McDonald's. McDonald's has made a peak G, and this is one I said to subscribers about 3 weeks ago. I said it's on my list to short, and then I just said, no, I'm going to hold off. Then, of course, I forgot about it. But it hit a high of 161.72, opens at round number 160 on the 11th of September, and trading right now at 154. That's quite a pullback for McDonald's. Hasn't had that, and I think that's dollar related. Peak E in the weekly chart, as I read it, leg E in the monthly. This is going to be something to monitor very closely. Sarah, I hope that meets with your interpretation. 157 is the resistance time period, moving average resistance. 156 to 157. Now we're looking at DRI, Darden. Peak D in the monthly, peak F in the weekly. It's already made its top So I'm looking at this at 78.47. Very strong resistance in the 81s, and a close under 76 in the next 2-3 days will be very negative. So that's DRI trading down 4 3/4 at 78.47. Next question I had is Goldman Sachs. Goldman Sachs acting quite nicely here. It's in leg ABC. Hasn't made a D yet in the daily. A, B, C. Could be an overlapping wave. Yeah. So it's acting quite nicely. So the XLF is XLF at this time. Goldman Sachs is at 230.85, up 59 cents. And the XLF, did I do that? I think I did. Is just having a high-level consolidation after a tremendous move. So I think it will make a leg C above that peak B. So that's the way I'm looking at it right now. So that's the investment banks. Now, a couple of questions I need to answer right here, real quickly. The VIX index, just make it real simple. The VIX index, oh, that's it. I'll be back with Tom O'Brien later today. But so far, we're still holding a lot of long positions. We've been back into the long position at times. Might be out by the end of the day. Very tight stop. But I think there's a chance just to roll a little bit higher in the mark, in the down the S&P, and the big drag is going to be the SMHs and the Nasdaq 100. So it's a fight going on.
Tom O'Brien has just announced that he'll be coming to Boston September 30th for a free workshop, The Art of Timing the Trade. Join Tom O'Brien Saturday morning, September 30th at the Boston Marriott in Burlington, Massachusetts, as he breaks down his trading methodology and provides you with the tools to become a more successful and profitable trader. Everyone that attends in person will receive a free signed copy of Tom's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System. Daryl Martin from Apex Investing Institute will also be presenting for 90 minutes at this free event.
Hi, folks. This is Tom O'Brien. Join me in Boston on September 30th as I return to my hometown for a workshop about the art of timing the trade. I look forward to seeing all the tigers and tigresses for this special free event.
All action starts early at 7:30 a.m. with a continental breakfast and wraps up at about 1 p.m. Topics that Tom will be covering during his presentation include quality volume, cause and effect, ABC structures, swing points, and much, much more. For all the information on this free Boston event taking place Saturday, September 30th, visit the front page of TFNN.com.